Arora, founder and fund manager with Helios Capital, joins us. So, every time Samir is on show, I always look forward to that smart one-liners because of late Samir has been tweeting a lot, at least on his Twitter account. So, Samir, good morning. What should we start with? How should I introduce you today as? Someone who is still an India bull, someone who is now cautious about what's going on, or it doesn't matter, India story will roll on irrespective of Trump and oil?
I think you can say that I have become slightly more bullish. I was very bearish last 3-4 months.
So why have you become slightly more bullish? Is that largely because you're confident of earnings or prices have come down to reasonable levels?
Well, that is because our shorts we did so well that we have covered many of them, including many even state-owned banks. Not because we think that their life will ever improve, but it just looked that 30-40% down was more than enough. So for the moment, our net therefore has become higher, mostly because we covered many shorts.
But
And you're right, could be that at the back of the mind, we are thinking that now people will focus on results. And for both US and in India, maybe excluding these banks, mostly the results should also be good.
Samir, got to talk about crude. Do you think it is still just an irritant, or is 70 the new reality that we're going to live with and continue to see the fall that we are seeing in the OMCs?
Well, OMCs, fortunately, we don't cover all our shorts. And so those are okay. But in general, I would think that it's more difficult to say for oil, except that I never believed that we ever had any reforms in this sector. Those reforms were only working because the prices were falling. We were never tested. And so I was always zero or negative. Fortunately, I was for the last many months. But in general, I don't know about oil beyond a point. I hope it doesn't go up too much. But I think from a stock market point of view, it has not been proven that a rising oil price is immediately negative for the Indian market or generally any market, because it comes with other issues. Now, if normally oil goes up because there's growth, it is considered as positive also many times, at least in the initial phase. Now, if it is happening because there is, tension or more to do with the tension between, Middle East and US, or US and Syria or Saudi Arabia, then it will have a slightly different angle. But generally, a few dollars here or there affects those stocks, but not so much the market, I think.
Okay, good relief to hear that. What about banks, Samir? You've been tweeting regularly. What do you do with ICICI Bank as well as Axis? Now with management changes at one, do you think we are at the trough of the bad news? The stocks have fallen, they're cheap. Are these stories that one should look at?
Please don't confuse the viewers or the regulators. I don't tweet about stocks. I tweet about big picture, and I don't think you'll find a single tweet about any bank by name or even which you could
Situation,
directly.
Samir. I never said that whether you're tweeting, there should be a buy or a sell or anything of that sort. But anyway, go ahead.
Philosophical tweets. So there has never been a tweet about any of these stories. So I don't know what is the exact question. Don't connect it to any tweet, otherwise I'll have to stop tweeting also. But there is no tweet that you could connect with anything particular. That is why it's so general and big picture. But coming down to the stocks, my thinking is that we have many analysts who are in the banking sector, but one analyst we have is the Reserve Bank of India. So we should use the Reserve Bank of India as our analyst. And if they are worried and nervous, we should not jump the gun on anything. These are not normal things where RBI tells the banks or the boards what to do. But if some analyst sitting at home thinks that he knows more than what RBI knows and what RBI is doing in an unprecedented way, then they are most welcome to their views. I rely on the best analyst at that point for anything. And right now, the best analyst for these stocks is the Reserve Bank of India, which itself is nervous and upset and angry. So why should we jump the gun?
Right, but just taking that point forward, Samir, given the fact that there's so much scrutiny around ICICI Bank and Axis Bank, and I'm naming stocks, what is the sense? We pretty much every single day are debating on whether at 1.6, 1.9 forward price to book, these challenges turn into opportunities for these biggies in the private sector. How are you viewing the story from an investment angle?
No,
Given, yeah,
I
okay.
don't. I don't view it anything as an opportunity, because what if it was an opportunity and you realize it 1 month later? So you would have missed, say, 10%. When I buy stocks, I don't buy them for 5-10%. Let it play out. Why should we keep jumping into every event, every takeover rumor, every news? Be like secular stories, which means when we buy it, we hope it doesn't happen every time, but we hope that now we're going to hold it for 2, 3, 4 years, and that will give us 20-30% per annum, or even 20% per annum. But we are not buying a stock because if I buy it today, tomorrow it might jump 5%, and then after that, if that happens and the news is out, I can also buy it. I can buy a stock 10% later, as long as then it should have a long runway. So we don't buy like this, that if I buy today while waiting for something, and on that day, suppose, let's say we do something today, and on the day RBI finally or whatever results come or something happens, and nothing more bad is found, you think the stock will be up 25%? If the market, first of all, you also have to look at the market and the background, that what is happening to the market, that will a stock go up 25%? Right now, there's a takeover happening in a hospital and the stock doesn't go up 5%. And right now we know there are two bidders and they want to bid and they're aggressive. Still the stock doesn't go up, because that also depends on the environment, the kind of issues. So therefore, if it goes up 10%, so good luck. If that goes up 10, others will go up 5 anyway. So this overdoing pre an event, we don't do. We would like to buy it after an event, or when there was no event and some people made it into an event. But an event per se is not. I don't think we have made ourselves ever any money trying to buy on some event kind, and this is the last quarter, this is the last phase, this is the last month of a bad result. Look at for how many years we have said the same thing on so many companies, that this is the last quarter. Look at the other way around. The steel industry was doing badly, and then they put very big anti-dumping duties, right? After they put it up, maybe I don't remember that day, the stocks could have jumped a little bit. Anybody could have bought it 5 days after that and still made a lot of money, when everything was known, in the sense that the environment has changed for them. But if you bought it 3 days before, thinking that now anti-dumping will come, let us say, or that minimum import price, maybe you made 3% extra, who cares? And maybe it wouldn't have happened. So there is no need to preempt everything in life every morning.
What would be your overall assessment of the banking situation in India? Primarily because so many people ask us this question pretty much every single day. Do you think that we are in a mini crisis of sorts? You know, a little while back I was pretty much coining it as an acronym, perhaps an IFC, an Indian financial crisis, so to speak.
Oh, it is a crisis, I think. It is a crisis. Look at it today. Now they are saying that there was another loan to Mehul Chokshi which was not counted. If it turns out to be true, it will be a disaster beyond limits. That after 3 months or 2 months of this, we still didn't even know that there's another 5,000 crore loan which was sort of not counted in our scam numbers. So it is pretty bad. As I said, I have just backed up from the stocks because, ultimately these are state-owned banks, so nobody's thinking that they're going bankrupt. And from a stock price, maybe they can fall, who knows? But I was happy with what we had made in that sense. Because the crisis is a little bit, otherwise you can say it was known, the NPAs were known. Now somebody will create a story that the NPAs were anyway known, so if they are accounted for early, if they go into the P&L early, it is better. But generally, the banking sector, as in the state-owned banking sector, is, I think, near mess only. What else can you call it?
Samir, so let's talk about something which you, in a sense, have mastered. You've mastered the art of identifying secular stories, and some of our viewers may recall, some of them may not recall, but we've interacted for over 2 decades now, and you've identified IT, you've identified private banks, you've identified pharma when nobody understood, how to value a company like Dr. Reddy and the molecules they were working on. So this is 2018. Can you give me a sense of where do you think there is going to be a secular growth and a secular demand cycle which could be favorable for next 2 or 3 years? You would say, look, I don't care about today, tomorrow, I don't care about this quarter, next quarter, but I'm reasonably confident of a secular growth for next 3-4 years. Which are those themes, ideas, names, or companies?
It has been very, very easy, to get 100 bankers also in this market. So let me explain the background. So for example, in the early 90s, the reforms in India were related to opening the market to private companies and foreign companies and reducing tariffs. So it was very easy to say that don't buy existing companies which have been protected for many years because their tariffs will go down from 100% to one day 10, 20%, and instead buy new companies that have come into private sector. So, you could buy about Bharti or Z or HDFC Bank or blah, blah, blah. And so you made a lot of money. The second round of reforms, which is sort of currently going on, are related to saying that we should have more financialization of the economy, we should have more formalization of the economy, that the unorganized guy or the guy who doesn't pay taxes will be hurt and the guy who's a bit organized will benefit. And you'll have deepening financials, you'll have more credit, the CIBIL scores are there, you can give more money to the sort of small scale because there's more data, people will use data and things like that. And the second one is formalization. So that is currently the theme, and that is the theme which will make you money till the third round of reforms happen, which will be that one day we will sell private sector, sorry, we will privatize banks, we will privatize Air India, or we will privatize, or we will reduce corporate taxes. That time we'll buy those kinds of companies. Today the story is very simple. It is financialization and formalization, and all of them will go on for a long, long time. Then the third story will come in. So the best is still private sector banks because it has today the tailwind of the previous bull run story, which was private companies competing with government, and still and the new theory or the new reform or new this thing big picture, which is financialization. That is why private sector banks, these 2-3 retail banks, are absolutely the best even today. But anything in financial sector, you can buy anything. We have all of them. You can buy NBFCs also. I don't think it's such a big deal. You can buy wealth manager, you can buy broker, you can buy asset management company. This is a big picture theme, but within that, do your this thing. But that theme is not doing anything.
Next question would be
Another
on
one. In the formalization, there is some confusion about whether the unorganized guy right now in some sectors they are dumping what they had produced for all the years because they didn't want the e-way bill, there's so many things. But still that theme will also work in the long run. We are bullish on both these things, very bullish.
Samir, what puzzles me is that why are Indian consumer names and especially consumer staple stocks trading at such elevated P multiples? They were expensive 2 years ago. They're expensive today also. And frankly, if I look at what markets have given a Titan or a Jubilant Foodworks or the kind of return which we have, of late got in a HUL, they've been absolutely amazing. Now, classic investor like you would say, look, I am aware that these stocks are expensive, they are great businesses, but not good prices. But yet someone in the market is really chasing the stocks. So what's the underlying logic here?
No, so the thing is, we don't own Jubilant. But in that, and even the other one, let's say Westlife or whatever, you got a big benefit on the top line because of the GST deduction. Now these guys are paying about 5%, of course with no credit on the other side, but it's a big deal. But if you look at last quarter's same store growth for these guys, it's like 20%. Where did you ever get 20% growth? And then they can say in theory, even though they're at 60p or 50p or whatever, that there is a young population, and these guys have delivered well in the sense of expanded well, that they are profitable, that there's a young population, and then there's formalization, and then they've got tax benefit, and then we have a low base effect, blah blah blah. But for Titan and others, the thing is they are the biggest beneficiaries of formalization by far. I think we bought it very late. We own it now, I'm telling you. We bought it very late because we should have had it when all the other stocks I have been a part of which have gone up 100 times. I don't think very few we would not have had, but this one we didn't have properly all our life. But I don't think there's a bigger beneficiary in India than Titan from a market point of view. Forget about the P part. Because you have demolished the competition. If you say that the third biggest company in India was saying that we sold fake diamonds, who will go to any of these companies anymore? And therefore, all the previous benefits of GST and being clean and not having cash, and now you find that the other guys were outright frauds. So very big beneficiary of this trend, and therefore we also reluctantly, in that sense reluctantly, although now we made some 15-20% already, but we said no, forget about the P for the moment. But in general, that's what I said. In some of them it's a bigger gift than normal because of just the relative positioning of the one company versus the other kind of thing.
Metal, Samir, they've had a good run so far. In the upcoming season, earnings season, do you think they can deliver another quarter of a strong performance?
Well, Nikun should be able to tell you that we broadly don't buy metals all our life or any of the thing. Although we own some steel stocks because we thought that their cyclicality has been drastically reduced by having very high protection. So then our biggest issue against cyclicality is that we can't predict what will happen. But if you protect it so much, then we don't have any moral issues. We just then bought it and we have them. But otherwise, we don't buy all these things.
Tomorrow is Infi Day. What do you expect, Samir?
Infi, nothing. It's like more of a great. I think the bigger event that has happened, which I thought you would ask me on, is the Singapore Nifty, which I'm most excited about. Singapore India Exchange, sorry, India Index.
Yeah, so tell us about your views there.
I think it's one of the most brilliant innovations that they have come up with. There is no underlying, so nobody can fight with them. All they are saying is that on the last day, we'll give you the Nifty price. So if on the last day you give me Nifty price, that means every day it is Nifty, but it's not called Nifty, it has no underlying. So let's see how the world accepts it. But it's a contract with no underlying, except that on the last day it becomes Nifty. And the theory of finance is that if two things in the future are the same, then today they are the same. So it's a brilliant legal maneuver, but let's see how it works. But it's very exciting, more than anything else. It's good.
How big is this XGX trading? I mean, you know, when we spoke to NSE and BSE, they said, look, it's a business decision. A lot of money or a lot of global trade moved out of Nifty to SGX. But is SGX very, very important, or do you think markets will adjust and nobody would care about SGX after a few days?
No, SGX is big for Nifty index. It is very big because if two foreigners have to trade with each other, why should they go to India and pay 30% tax? So it is very big. We do single stocks, so we don't use it as much. But we just enjoy brilliant maneuvers because we are analysts. We analyze many things and we enjoy it. That is how we survive in this world for 20 years, because you should enjoy the business of finance. So when one party does a counter maneuver another party and the other party is stuck, it's fun since we are observers.
So Samir, I remember we had a conversation in Jan. That time you were slightly circumspect. You said, look, markets were too high. Nobody was talking about valuations. Everybody was taking volatility for granted. But now we've seen a shakeout. So what is your sense? Do you think we are nearing the end of the decline, or this is going to be one of those years where we should not try and predict the market because there are too many moving parts and volatility is going to hit us both ways?
No, I don't think it's a bullish market in the sense that now you'll make 20% return from here. I don't think we're going to do that. All I thought was that in the last 3 months, we had 3 or 4 negative news thrown at the market. One was the long-term capital gains, which of course is a lifelong negative that they will never be able to overcome. The second one was the PNB issue. And then the third one was this Axis, ICICI type of news. And then global volatility was also there. And after all that, the market, if you look at it from December end, it's down like 4-5%, and mid caps are down more. But we sort of thought that what we normally short, basically they had fallen enough and we didn't feel that at this price we should be having them. And then this result season, which I think in US will be very good, because ultimately who are we? We are just blind followers of what happens in US. We don't have our own anything. So the US market will be good, so there'll be more excitement. And Indian market also, the returns will be, results will be okay, at least in the stocks and sectors that 90% of the public concentrate on, which is non-PSU banks, non-commercial banks. And so for the moment, there is no need to be overly negative. But I don't think suddenly it has become an environment in India or in the world to say that now is the time to buy and, sort of see the next round of bull run and stuff like that. It's okay. It's like, the first phase has played itself out. Let's see how it goes. But it's not super exciting, but there's no need to be super negative, which is the only thing what we have changed. So we have, because we covered our shorts, our net became some 65, 66. We would be happy to bring it down one day, but we must find new names because these names have delivered.
All right, Samir, would have loved to talk to you also about your new edition in your book collection, which is Principles by Ray Dalio, but we'll leave that for some other time. Thanks very much. I think we have a fairly exhaustive discussion. We've completely run out of time, so maybe later we could get on that call. But that's Samir Arora talking about a whole host of issues and calling the banking system right now to be in a bit of a crisis mode, a bit of a transition period, which would be challenging for the space. We'll take a break then. On that note, the markets are flat, but there's a lot of stock-specific activity that we'll delve into when we come back, so don't go anywhere.